tomorrow, we are going to be taking cash budgets and we'll be using the Ican November 2018 question. After we have gone through the question, we'll begin to profile the solution to the question. So we help us read the question, then we will proceed to answering the questions.
Omebo AG Nigeria Limited is a trading company that specializes in buying and selling of bulk oil. The company is financed by a capital base of 24 million, inclusive of reserves in a mix of 30% and 70% of debt and equity respectively. The company has been in trading business for the past 6 years and has consistently adhered to its corporate policy on sales, purchases, and inventory management. The company's policy on sales is to ensure that sales proceeds are collected as follows. Cash sales is 30% of the monthly sales. The balance of the month sales is to be collected in the month following sales. The policy on monthly purchases, which is in agreement with the supplier's policy, is to pay for all supplies in the month following the month of purchase. The general policy of the company is that purchase costs for bulk oil represents 60% of the corresponding annual sales value, while its inventory policy is to reserve 30% of the month's purchases as closing inventory. The following information is available for the 5 years 2013 to 2017. Actual estimates, monthly sales, monthly salaries, monthly rents, monthly expenses. Additional information: the company will purchase a motor vehicle in July 2016, which will be paid for in 2 installments as follows. First payment will be 60% of cost in September 2016, while the balance will be paid in November 2016. The cost of the motor vehicle is expected to be 7,500,000. Annual depreciation for the motor vehicle will be 20% on a straight line basis. Monthly expenses include annual depreciation for the motor vehicle. The cash balance as at December 31st, 2014 was 2,500,000. The company's salaries, rents, and expenses will be paid in the months during which they are due. Required: A. Prepare a cash forecast for 2015 and 2017 showing closing cash balance at each year end. B. Prepare a forecast profitability statement for 2015, 2016, and 2017. C. Determine and comment on the forecast liquidity ratio, current ratio for 2017.
Okay, the A part says you to do what? What was the requirement for A?
To prepare a cash forecast for 2015.
Prepare a cash forecast for
2015, 2016, and 2017.
So, in preparing a cash forecast, we will get the cash inflows, then we will proceed to get the cash outflows. We'll get the difference between the cash inflows and the cash outflows to get the net cash flow. Then from there, we can add up the opening balances for each year. Then, we'll start with the cash inflow as you see. Start with the process of cash inflow. So the cash inflows, we will be starting with the revenue. As the revenue, what was the conditions given in the revenue? What were the conditions given in the revenue?
For 2015, we have 16,800.
That is your monthly revenue, okay?
Yes.
So we have 2015, 2016, 2017. And the monthly revenue is what for 2015?
16,800.
16,800. For 2016,
18,000.
18,000. Then for 2017,
24,000.
24,000. Now this is for per month. We need the annual value. So this will be times 12 each. 16,8 times 12.
We have 201,600.
201,600. 201,600. This is the annual revenue for 2015. 2016.
216,000.
216,000. 2017.
288,000.
288,000. Now this is the annual revenue. This annual revenue. And what information was provided based on revenue? I say that. So how many percent is needed will be received immediately?
Okay, they said cash sales is 30% of the monthly sales.
So we are going to have cash sales. Cash sales. Which I said is what?
30%.
30% of the
monthly sales.
Is it monthly or annual?
Okay.
They say cash sales is 30% of monthly sales, but the other 70%, which is the balance, will be collected in the month following sales. So, but this is the annual sales. If I should go by 30% of this amount times 12, I will still arrive at getting 30% of this. Although I will still bring in the 30% of monthly sales when I'm computing for the credits, the collection of the other balance. So let's just take 30%. Yes, 2015, 2016, 2017. Then I have 0.3 times 201, 600. Then we'll have 0.3 times 216,000. 0.3 times 288,000. What are the values now?
The first one, 6480.
6480.
Yes.
Is 30%. 6480. Yeah?
The second one, 64,800.
64,800. And the third?
86,400.
86,400. So we are going to deal with the collection of the balance, as I mentioned. Collection of the balance. So talk of the balance, or we call it receipt from debtors. Let's say receipt from debtors. Receipt from debtors, which is that balance of 70%. Now, clearly in the question, we are given amount. Our monthly sales, as we have written here, we say is 12,000, 15,000, 68,000. Sorry, 6,800, 18,000, and 24,000. Now, for that 2014, for the December value, we'll be computing for the receipt from 2015. The December value, which is the closing inventory, it will come in to this 2015 as the opening inventory. So we'll have opening inventory. For opening inventory, what value do we have?
15,000.
15,000. 70% of 15,000 is what?
We'll have 10,500.
10,500. So 70% of 15,000 will give us 10,500, because it's 70% that is being received in the subsequent month. The other 30% was received in the month of December 2014. So the remaining 70% is what will happen. Then for 2015, January to November, 2015, January to November, what value do we have for 2015?
16,800.
6,800.
Yes.
January to November.
Yes. So 70% of it.
70% of 16,800 is what?
129,360.
70%. Let's check 70%. You can still multiply it. 70 over 100 times 16,800. You give us what?
129,360.
Times this. Just that before we multiply it.
Okay.
January to November.
The answer is 129,360.
Total. Individual. 50% of 16,800 will give us what?
Okay, 11,760.
11,760. Since we are taking January to November, we'll be having 11,760 times 11, which is 11 months, giving us what?
129,360.
129,360. Okay? So that should be for 20. That should be for 20 what? 2015. The addition of both of them will be what? Total will be 10,500. Abi?
Yes.
10,500 plus 129,360 will give us what?
139,860.
Now this is the receipt from debtors. We have initially computed for the cash sales, which is the other 30%. The 70%, but this is for 2015. Then we'll take for 2016. 2016. For 2016, if you recall, we took January to November of 2015, meaning the December 2015 have not been taken, and the value for each of the months is what? 16,800. But what we actually need is 70% of that value. So 70% of 16,800 will be our opening inventory. 70% of 16,800.
Okay, we'll be having 11,760.
11,760.
Yes.
11,760. 11,760, then we'll take January to November. January to November, 70%. What is the 2016 sales? 2016 sales as we have here is 18,000. So 70% of 18,000. %70 of 18,000.
Okay, 12,600.
12,600. So 12,6 times 11 months will give us
138. 600.
600. Now the total would be 11,760 plus 138,600, which will give us
a total balance of 150,360.
150,360. 150,360. So 11,760 plus 138,600 is 150,360. We have done for 2016. So we'll move up to 2017. 2017. For 2017, as you recall, we have a December value for 2016 that we have not picked. And we'll be working with 70% of this amount, which is 12.6. Abi? That will be our opening inventory. Abi?
Yes.
So that will be 12,600. Then we'll take January to November. January to November. January to November, we have what value? January to November, which is 11 months, we'll be working with what? 2017 value for sales is 24,000. So, just as we did here, we'll be having what? 70% times 24,000. 70% times 24,000 will give us what?
Okay, 184,800.
That is the annual value. 70% times 24,000.
I'm coming. 16,800.
16,800 times 11. This for 11 months. Gives us what?
It should give us 184,800.
184,800. So we'll add up this, which is our total. Total will have 12,600 plus 184,800. Gives us what?
197,400.
197,400.
Yes.
Now, this is a receipt from debtors for 2015, 2016, 2017. Now, the inflows will be both the cash sales and the receipt from debtors. So we are going to get the total inflows before we proceed to the outflows. So we'll get the total inflows. Total inflows. So total inflows. Total inflows. The total inflows we have for the year 2015, 2016, 2017. Now we have cash sales. I will have receipts from debtors. Then total. Cash sales received from debtors and total. Now the cash sales for 2015 is what?
6480.
6480. 2016.
64,800.
64,800. 2017.
86,400.
86,400. Added to the receipts, cash received from debtors for 2015.
139,860.
139,860.
153,60.
153,60.
197,400.
197,400. So the total gives us what?
The first one, 200,340.
200,340.
Yes.
200,340. The second?
The second, 215,160.
215,160.
60. The third one, 283.
283.
800.
800. Now this is total inflows for 2015, 2016 and 2017 as requested. But we still need to get the outflows. Then we'll proceed to answering this A part of the equation, which is prepare cash forecast for 2015, 2016 and 2017. Okay, so we'll take the outflows. For the outflows, we are going to take payment to suppliers. Payment to suppliers. For payment to suppliers, the instruction they gave here was that we have 60% of the annual sales as the purchase. So annual sales first. Annual sales 2015, 2016, 2017. Annual sales for 2015 is what?
201,600.
201,600. 2016.
216,000.
216,000. Okay, 216,000. 2017.
288,000.
288,000. Now they say 60% is purchases. So purchases is 60%. So 60% of 201,600 will give us
120,960.
120,960.
960.
Or 60% of this 216,000.
129,600.
129,600. 129,600. Then 60% of 288,000.
172,800.
172,800.
800.
Now, this is for the annual value. So monthly value is divided by 12.
We'll be having 10,080.
10,080. 10,080. This divided by 12.
10,800.
10,800.
Yes.
10,800. This divided by 12.
14,400.
14,400. This is the monthly value. Then we'll have the one that is coming from December. That is the one coming from the previous year. Because we know we have December values and we have January to November. So this will represent the January to November value. We'll multiply this by 11, but we'll get the December value from the previous year, which is 2014. 2014 annual sales will be what? 2014 value is for sales is 15,000. For 2014, we have 15,000 times 15,000 times 12 is what? 15,000 times 12.
180,000.
180,000 times 12 is 180,000. That 180,000 that we have is the annual value. Is the annual value, which is this annual sales. 60% of it they say is for monthly. So 60% of this. So 180,000 times 0.6 will give us what?
108,000.
108,000. So the 108,000 now divided by 12 will give us what?
9,000.
9,000. Now this is the monthly purchase value. So we are going to we'll pick 9,000 as the December value, since it's the monthly value from January to December of 2014. It will come in here in 2015, 9,000 coming from previous. So the payments now, which is the payment made. The payment made will now be 10,080 times 11 plus 9,000. Which gives us what?
119,880.
119,880.
Yes.
119,880. Okay. So this value, which is the monthly value for 2015, will come in here 10,880. So I'll be having 10,800 times 11 plus 10,080, which will give us what?
128,880.
128,880.
880.
128,880. Then this value will equally come here 10,800. 14,400 times 11 plus 10 8 will give us what?
169,200.
169,200. So this is the payment to suppliers. We have our payment to suppliers. From the payment to suppliers, we are still looking out to do our monthly salaries, monthly rent, and our monthly expenses. These are monthly values, and we multiply them by 12 since we are working annually. We'll start with the salary. Start with the salaries. So we'll kick off from the salaries. For salaries, we have 2015, 2016, 2017, 2015, 2016, 2017. And the information they have for the salary is what? The salaries are what? Paid as at the month that is due. So we'll multiply each of them. For 2015, we'll have salary of 960. So we'll have 960 times 12, which will give us
11,520.
11,520. For 2016, we equally have 960. So we'll have 960 times 12, which is still 11,520. Then 2017, we are having salary of 1,080. So we'll have 1,080 times 12, which gives us what?
12,960.
12,960. And this is the salary for 2015, 2016, and 2017. We'll go to rent. The monthly rent, as I said, is 400 naira all through. So that will be 400. 400 times 12 months, giving us what?
4,800.
4,800. Now that is for the rent. We'll proceed to expenses. And there was an information on expenses. What information is there? That depreciation is included in the expense. Depreciation is included in the expense. And one monthly expenses for 2015 to be 390 expenses. As we have in expenses, the car was bought in 2016.
Yes.
So it means that in 2015, depreciation did not occur. So we'll still have two values, 2015, that is 390 times 12, which will give us what?
4,680.
4,680. Then 2016, they said they bought the car from what? July.
Yes.
They bought the car from July. July to December is 6 months. So depreciation will come in for 6 months. What will be the depreciation? They said the value of the car is what? The value of the car is what? What is the value of the car?
7,500,000.
7,500,000. So, and what is the depreciation rate?
20%.
7,500,000 times 0.2 will give us what?
125,000.
Will give us what?
1,500,000.
1,500,000. So the 1,500,000 we'll divide it by 12 to cover for the 12 months, which will be what?
125,000.
125,000. If you record, all of these values you are using are in thousands of naira. So it's equivalent to us writing 125. So for 2016, depreciation had an effect for 6 months. And what is the 2016 value? The 2016 value is 960, is it? For expenses, 390 also. Have you?
Yes.
So 390 times what?
12.
12. Then what else? You say we'll less what? The depreciation for 6 months, which is 6 times what?
125.
125. So that will be 6 times 125, which will give us what?
Okay, the final answer is 3930.
3930.
Yes.
3930. For 2017, the depreciation will take effect for the full year. What is the 2017 value? 2017 value for expenses is 380. So we have 380 times 12 minus 12 times 125.
The answer is 3,060 naira.
3,060 naira. Now this is for expenses. You have for rent, you have for salaries, you have taken for the amounts paid to the creditors. So we are going to add all those things together. We have not solved for the motor van, sorry. The motor van, they say they bought it in the year 2016. And they clearly told us that they first paid 60%, then they paid the remaining what? 40% when? They paid the remaining 40% in November, Abi?
Yes.
Meaning it is still in the same year. Assuming they paid the 40% in December, we have gone to 2017. So we will cover for the motor van fully in 2016. So for 2016 only, that will be 7,500,000. We've covered all of this. So we have to add up all the expenditures and the amount paid to the creditors to give us the total outflows. So we'll work on our total outflows. Total outflows. So total outflows. For total outflows, you have 2015, 2016, 2017. Then we'll have payments. We'll have salaries. We'll have
Rent.
We'll have what else?
Vehicle.
We'll have expenses. And what? Income. So, for payments, 2015 payment is what?
119,880.
119,880. 2016.
128,880.
128,880. 2017.
169,200.
169,200. We'll add it up to salaries. Salaries 2015.
11,520.
11,520. 2016.
11,520.
11,520. 2017.
12,960.
12,960. Our rent 2015.
48.
48. So it's 48 all through. 48. Then 2017 is equally 48. Vehicle is only captured in 2016. So we have
7,500.
7.5, which is like 7.5 million. Then nothing here. Expenses 2015,
4680,
4680, 2016,
3930,
3930, 2017,
3062,
3062,
62, 3062,
062. Total is what?
140,880.
140,880.
The second one, 156,630.
156,630.
Yes. The last one, 190,020.
020. Okay. So total outflows have been captured. Total outflows have been captured. We can proceed to computing. Let's say prepare a cash forecast for 2015, 2016, and 2017. We are going to work out that now. 2015, 2016, 2017. Cash forecasts. Cash forecasts. Okay, let's take this as 2015, 2016, 2017. Total inflows. We have total outflows.
Okay.
What are the inflows?
For 2015, we have 200,000, 340.
200,000,
340.
340, yeah.
2016, 215, 160.
160, yeah.
283, 800.
So the outflows 2015 is what?
140, 880.
140, 880. 2016,
156, 630.
630. Then 2017,
190, 020.
190,
20.
So, okay. If you less than what do we have? That will be our net cash flow. Net cash flow.
59460.
59460,
460.
yeah.
58,
58,
530.
530, yeah.
93,
93,
780.
780. Okay. So we have our opening balance. We work on opening balance. Our opening balance for 2015 have to be the closing balance for 2014. The 2014 purchases, what did I say we'll have as of December? 9,000, Abi?
2,500,000. For the opening balance.
The opening balance, sorry, 2,500,000, Abi?
Yes.
It was mentioned. 2,500,000. So we'll have 2,500,000. We add this, we have what?
61,960.
61,960.
960.
So that will be what? Closing balance, which will come as opening balance. 61,960. We add them, what do we have?
120,490.
124,90.
90.
Which will come here as opening balance.
214,270.
270. Okay. This is a cash forecast, which is the A part. Prepare a cash forecast for 2015, 2016, and 2017 based on their requirements. So we'll take the B part, which says calculate calculate or prepare the profitability statement for 2015, 2016, and 2017. So we'll go to that profitability statement. Which is the B. Profitability statement. For the profitability statement, we need to have what? To have what? Revenue. Abi?
Yes.
Revenue, was it? Have it been calculated? We have computed for that. Abi?
Yes.
So we have 2015, 2016, 2017. So revenue less cost of sales, that is what we'll be going through. To get the gross profit, then less operating expenses, we are going to arrive at net profit, which is what they are looking out for. So the revenue 2015 is what?
200, 340.
200, 340.
Yes.
2016,
215, 160.
2017,
283, 800.
283, 800. Now, cost of sales. We need our cost of sales value, which will now arrive at gross profit. Now, let me compute for the cost of sales. For the cost of sales, we'll have the formula, which is what?
Opening stock.
Opening stock. Opening stock.
Plus purchases.
Add purchases.
With less closing stock.
Less closing stock. So we'll do that for 2015, 2016, and 2017. So for 2015, 2016, 2017. For 2015, what's the opening stock?
2,700.
Which we have gotten as a result of what? 30%. 30% of what? 9,000. Abi?
Yes.
Which is coming from 2014. So that will give us 2,700. So that comes here, 2,700 plus purchases. What was our purchase?
129.60.
129.60. 129.60. Our closing stock,
3,204.
which comes as a result of what? 30%. 30% of what?
10,800.
10,800, which is for the year 2015. 10,800 is what? Is it 3 what?
3,024.
024.
Sorry, 10,080 naira.
10,080 naira.
Yes.
Are you sure?
Yes.
The 10,080 naira.
So the third day that was 10,800.
Okay. So that comes here 3,024. This closing stock comes here as opening stock, 3024. The purchases is what?
129,600.
129,600. The closing stock will be 30% of what?
100.
30% of 10,800, Abi?
Yes.
Which gives us what?
3,240.
3,240. So 3,240. This comes here 3,240. The purchases is what? What's the purchase?
Okay, 172,800.
172,800. The closing stock is 30%. 30 over 100 times what? 14,400. Which gives us what?
4,320.
4,320. So here is 4,320. So let's get the cost of sales for each of those values.
For the first one, we have 120,636.
120,636. 120,636.
The second one, 129,384.
129,384.
The last one, 171,720.
171,720. Okay. Those that will be wondering why we use 30%, they have clearly told us that they are keeping out 30% as their closing stock. So out of those their purchase values, are keeping out 30% as their closing stock. So that was why we took 30% of those values to get each of these closing stock values, this opening stock value, because closing stock in the previous year is opening stock in the current year. So this will give us what? 200,000 minus
79.
79.
Yes, 704.
79,704.
The second one, 85.
85.
776.
776.
The last one, 112.
112.
080.
080. So we are going to less operating expenses. Operating expenses. So for the operating expenses, we have to add up. We have to add up our what? Rent. I think we should work that out here. B?
Yes.
Yes. Have our operating expenses. Operating expenses. That will be 2015, 2016, 2017. So we have what?
Salaries.
Salaries. We have
Rent.
rent. We have expenses.
And depreciation.
We have depreciation. That's all.
Yes.
So salary for 2015.
11,520.
11,520. 2016.
11,520.
11,520. 2017.
12,960.
12,960. Rent.
4,800.
4,800 all through. The expenses to have what?
4,680.
4,680, yeah.
3,930.
3,930, yeah.
4,800.
4,800. We have computed all
Sorry.
this before.
Okay,
We are just bringing them in. So you can revisit the prior computations to know how we got these values. The depreciation, 2015 encountered no depreciation.
I think I made a mistake in that figure.
Which one?
Okay, for the 2017, the expenses is 3,016 naira.
3,016 naira.
Yes.
No other error, Abi?
No one.
So for 2016, we have a depreciation of what?
750.
750, which is for 6 months. Then we have the full year depreciation in 2017, which is 1.5. Abi?
Yes.
So add up all of these expenses, all of these operating expenses.
Okay. The first year, 2015, we have 21,000.
21,000.
Second one, 21,000.
Second equally 21,000.
The last one, 22,320.
22,320. Now, that is the operating expenses. Then it will lead us to getting our net profit. We have gotten our gross profit before. Net profit is our net profit. So that will bring us to the end of the profitability statement.
So for the first one,
We have what?
we have 58709, 709, 64776,
64776,
89730,
730. Okay. So that is the profitability statement. That is the profitability statement. We'll move on to the C requirement, which is determine and comment on the forecast liquidity ratio, which is the current ratio for 2017. So we'll do current ratio for 2017. Current ratio for 2017. We will see current ratio 2017. Current ratio is simply current asset over current liabilities. So we need to compute our current assets for the year. So what do we have? We have our first, which is for our what?
closing inventory.
Closing inventory. Closing inventory. What's the amount?
4,320.
4,320. We have our what?
Trade receivables.
Trade receivables. Trade receivables. And what's the amount?
16,800.
16,800. That is for the year 2017. Then we equally have what?
Our
We have
cash.
our cash. And what is our cash for 2017?
214,
214,
270.
270. You can revisit our previous computations to get each of these values and what have you. The summation of them is what?
235, 390.
235,
390.
390. So current liabilities. Current liabilities. You have what?
Trade payables.
Trade payables. What's the amount?
14,400.
14,400 for 20 what? 17. Have we?
Yes.
14,400. You can revisit our prior computations to get each of those values. You refer to them, mark them already. So current asset over current liabilities. Current asset is what? 235, 390 divided by current liability, which is 14,400, giving us
16.31. 16.3 is 2.
16.3.
Yes.
16.3. So we'll be having 16.3 is to 1. That is the ratio. Current ratio. 16.3 is to 1. So the comment for every short, for every 1 naira short term liability, we have 16.3 naira current assets. So this is a good liquidity position that's a good liquidity position. So that brings us to the end of this question from Ican November 2018. Thank you very much for your time, and I hope you find the forthcoming May 2025 diet examinations.